Tom Bowley, Chief Market Strategist here at Earnings Beats. Hey, good morning, everybody, and welcome to this Tuesday, August 13th, 2024 edition of Trading Places Live. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host here for the next 30 minutes or so as we prepare for another trading day. We did get the first of two key inflation reports out this morning. The first one, the Producer Price Index, out for the month of July. The expectation was for the headline number to come in at plus 0.2%. Also, when we strip out food and energy, the core PPI also expected to jump 0.2%. Both numbers came in ahead of expectations, better than expectations, with the headline PPI number coming in with a rise of 0.1%. So that was just below that expectation of 0.2. And then the core PPI came in flat, 0.0% versus the expected 0.2%. So got off to a good start now in terms of the inflation reports this week. Immediately saw a drop in the 10-year Treasury yield. So we are back into another short-term downtrend in the TNX or on the TNX. That's a good thing. And we have futures up this morning. Last time I looked, they were up probably roughly around 0.75%, maybe even up closer to 1% on the NASDAQ. But we'll get into that here shortly, and I'll give you those numbers. But at least, when you look ahead to this week, after a week of almost no economic reports last week, this week we're really chock full in terms of both inflation reports and also other economic reports that'll be out later this week, like retail sales, which are obviously watched very closely. So a lot of information out there for traders to try to go through and decipher. And step one was certainly a bullish step this morning with hardly any inflation whatsoever showing up at the producer level. Again, I'll just keep going back to why is the Fed waiting? I don't quite get it. But I will also say at the same time, the bigger report is tomorrow, and that is the consumer price index. So what core CPI does, I think, is going to be much more important than what core PPI does. So we'll keep an eye on that for tomorrow morning. We may have a good day off of the good inflation news today. And if something comes out poorly tomorrow, then we could have another battle to fight. However, it is also options expiration week. So July monthly options will be out or will be, due come Friday at the close. And as a result, normally what we have is the market moving up with option expiration maybe acting as a headwind. This month, because of the huge gap down we saw last Monday, we've been trying to battle back slowly. But I believe the max pain levels on just about all the major indices and many key stocks are higher than where current prices are, meaning that it would make sense for market makers to move prices up this week, which we saw yesterday, and which we're seeing at today's open, or potentially at today's open based on futures. So we'll see how all this plays out. But we're still in a volatile period. The VIX remains above 20. It got down into the 18s yesterday, went back up and closed above 20. So this is a critical area. If you're a student of bear markets, then you know that, or if you followed us and the things that we've done, we've talked about the anatomy of a bear market, what makes it tick. And one of those things that makes it tick is fear. That's a common denominator in every bear market we've had. So that fear level, which is measured, most people agree by the VIX, during bear markets does not go down below 17. So yesterday we got down to 18 and change, back up to 20. Today, I'm sure the VIX is going to be down with the gap ups this morning, or the likely gap ups at the opening bell. So we'll just kind of watch, play it by ear, see how things evolve throughout the day. But just keep that VIX 17 level in mind, because even when we've had very bullish periods within these various bear markets, whether cyclical or secular, we don't see that VIX drop back down below 17. So that's one thing I'll be watching today. All right, let's go ahead and take a look at what happened yesterday on Monday, August 12th. So it was the start of options expiration week. Not a whole lot of news.
Could you share your screen real quick?
Oh, my bad.
No, that's okay.
All right. Thought I had already done that, but you're right, I never did. Okay, so there are the charts we want to go over here at the very beginning, showing yesterday's action. Dow Jones Industrial Average finished down a little bit more than 1/3 of 1%. Kind of zero in on this so you can see it a little bit better. There we go. So you had the Dow Jones Industrial Average down 140 points, which was just a little bit more than 1/3 of 1%. You can see we're still hanging out here below these moving averages. We need to get through. The gap up will certainly help, but can we sustain that move? Probably going to be sitting right at major resistance levels, I imagine, as we go into the CPI report. That would certainly make sense. S&P 500 also working its way up. Yesterday was completely flat, up 0.23 points to 53.44.39 from 53.44.16. So really not a whole lot of action yesterday. It was kind of a boring day, but the S&P did end up almost exactly flat. And you can see we had support around 5,400. We bounced up to about 5,570, came back down, went right through 5,400. And now look at where we are. We got down almost to 5,100. We've worked our way back to 53.44 on the close. The 20-day EMA right now is 53.92. And again, that's just about where that price resistance is. So S&P 500 still got a little bit of room to the upside. With the futures this morning, it looks like maybe we'll get closer to that 5,400 area of resistance. And then let's see what happens from there. NASDAQ 100 also down below these key moving averages, down below the prior lows. So we're still battling overhead resistance. Finished yesterday up a little bit, 0.16%. That was 29 points. But again, still stuck beneath these key moving averages that we're going to have to try to get through. The first one, notice where we failed when we first started breaking down back in mid-July. When we came back up, we couldn't get through the 20-day moving average. Took another big drop to the downside. Came up, couldn't get through the 20-day moving average. Right back down again. Well, here we come again. We've got both the 20-day and price resistance coming up on the NASDAQ. And with today's pre-market action, we're probably going to be up right against this 20-day moving average. That's at 18,861. Might be a little bit below it because I think futures were right around 1%, which would be 185 points, which would take us to what? 18,727. So that would still be about maybe 0.7% shy of the 20-day, assuming we open up about 1%. So this will be an interesting level to watch. I mean, you can already see the Dow, S&P, NASDAQ all lining up for these 20-day tests. Mid caps moving back up, recently, but yesterday we did fall 2/3 of 1% as we were getting close to these moving averages, also trading below. Small caps, no difference here. Been trying to rally on a relative basis, though not doing as well as the S&P and as the NASDAQ. But we got a lot of work to do to try to get back above about the 209, 210 level. And then with the falling 20-day moving average sitting at 210.78, and it'll be down even further today once we get an opening price. So we've got a lot of work to do right around 210 here. Finished yesterday at 204. Maybe we get up to 205, 206, something like that at the open. And then we'll see what the market's made of. See if the IWM small caps can make a move and a push toward that 210 level. Dow Transports also, all of these kind of look like bear flags to me. Straight down move, that's your flagpole. And then you kind of get this wave action, a little bit of a move back to the upside. Just seems like a little bit of a bear flag. That doesn't mean it's going to execute, but if it does, it would not be good for the market. So watch these recent lows that we posted here back at the beginning of August. All right, moving on. Let's move on to the sectors. XLK technology, the best performing sector yesterday. Doesn't really surprise me. Again, we've got Max Payne coming up. This group was probably was hit harder than any other group. We had fallen from almost 240 back in the second week of July to early August down at 190. I mean, that was a very steep drop, very quick drop. And I think now XLK has got some work to do again, just like IWM. 210 seems to be a pretty big area of resistance. That's where you're going to run into price resistance. And then also the declining 20-day, which is at almost 212, just under 212, but declining every single day. So 210 to 212 on the XLK is going to be really important for the stock market. If we can get through, and the reason I say that, by the way, XLK is 32% of the S&P 500, and it's more in line with about 50% of the NASDAQ 100. So this is obviously a huge component of the overall market. We need to get through these key resistance levels, and it starts with the XLK. Energy, second best performing group yesterday, up about 0.5%. Energy also battling up against key moving averages. That's definitely a common theme. This has been a nice rally. We were very oversold. We're now up against what I consider to be a very significant area of gap resistance, price resistance, and moving average resistance. Utilities more in an uptrend, obviously more defensive. They've held up much better during this selling, actually printing new highs, holding the rising 20-day moving average. This would be, kind of look at this opposite of everything else we've talked about so far. This is trending up above its 20-day moving average, above price support. And if the market were to turn around, if we actually see more of a rally and the rally starts picking up steam, probably we're going to see that XLU move back down below key support, below the moving averages as money rotates back into more aggressive areas. Now, if the stock market keeps going up or tries to keep going up and utilities are leading and we're seeing technology start to struggle again, that would not be a good sign. To me, that would be another signal of rotation before maybe a steeper drop. So a couple things to think about there. Renewable energy, as we move on to industry groups, renewable energy, good day yesterday, finished above its 20-day moving average by about 3 points, 411.26 versus 408.43. And the reason I'm mentioning this is it's the first time it's happened since June, where the renewable energy space has actually been above its 20-day moving average. As you see prices moving lower, check out that PPO, which has been turning up. This seems like renewable energy should make a move up toward the 445, 450 area, test that 50-day moving average, and then see what happens from there. But normally when you get a positive divergence, that's when I expect the 20 period moving average will no longer hold as resistance, that we should look up to that 50. I think moving back up near recent price highs, that looks like about 435 to 440. And then you've got the falling 50-day moving average just above that. Those are areas I'd be watching on renewable energy. Semiconductors back in the news here, at least in terms of relative strength. We haven't seen a lot of relative strength out of semiconductors over, the course of the last 2 months since they topped back in June. But this week they have shown some relative strength coming back. A breakout above that 20-day moving average would be really bullish, not just for this group, but for technology and for the overall market. So I think semiconductors, in my opinion, are the most important industry group to watch right now. If they fail at price resistance, gap resistance, and this declining 20-day moving average, which is up about 600 points, that's probably about 3 to 3.25% right now. We're trading below the 20-day. So if we get a pop at the open, 1-2% on this group, we're going to be really close to that 20-day. And again, look at the 20-day moving average and the wall that it has provided, wall of resistance over the course of the last month or so. So that would be the first step to really begin to do something to repair the chart. Bouncing off of oversold levels after the huge drop we made. I mean, you never know exactly when you're going to get the bounce, but typically you get a bounce. The bounce doesn't mean it's bullish all of a sudden. The bounce just means we're getting back up to key areas of resistance where we're likely to see a bigger battle take place. And again, like I said, 20-day moving averages are going to be pretty critical. We have options expiring this Friday. Although most companies with this rally have gotten back closer to max pain, there's probably still a little bit more upside left. And by the way, that upside, we're going to talk about a little bit tonight in our max pain session. So the monthly options expiration, which occurs every third Friday of each month, we always have our max pain session 3 days before that. So it's always the Tuesday before the third Friday. So the third Friday this month is the 16th. So we're having it on the evening or the afternoon of the 13th. So that'll be starting later today. I think it starts at 5 p.m. Members, there will be an email sent out to you today for room instructions. Anybody who would like to attend, even if you're not a member, You can attend by joining as a 30-day trial member. So just make sure you go over to earningsbeats.com. I'll show you where you can do that in just a minute. But if you want to join us for this session, these are usually really eye-opening sessions. Last month was absolutely right on cue. Talked about the fact that we probably had downside action in the market. Certainly did move lower last month during option expiration week. So anyway, we're going to talk about that a little bit later tonight. I won't spend time right now on it, but you can bet we'll be talking probably about some of the semiconductors and how they look relative to their max pain. And then, of course, we got that CPI report coming out tomorrow. I mean, this is going to be a crazy week for sure. Aluminum, the final industry group I wanted to talk about. Aluminum making a move, jumping over 2% yesterday. But like so many others, this one's actually been in even a bigger free fall and it's taken out a number of recent price support levels. Well, we're getting an oversold bounce. And with that bounce, again, comes perhaps a 20-day EMA test. This group is looking at 111.37 as its 20-day, and it closed at 106.55. So it's still got probably about 4% upside to reach that 20-day EMA. Moving on, 10-year Treasury yield. So again, the only economic report of any significance out this morning was the July PPI. That came in below expectations, which is generally bullish for equities. And it's also bullish for bonds. So a lot of folks that are thinking, hey, if we don't have any more inflation, if we don't have to worry about inflation, I can jump into a 10-year Treasury yield or Treasury and yield about 4%, risk-free. So a lot of folks doing that, thinking that rates are going to come down, that the 10-year Treasury yield's likely to come down, meaning that bond prices keep going up. And if you think bond prices are going to keep going up, then buying bonds right now is not a bad strategy. So I think that a lot of that is what's going on. I certainly don't see anything in the bond market telling me that we've got inflation problems ahead. I think, again, it's been pretty consistent. I think this is a message that's been sent to the Fed, was sent plenty of time in advance of their meeting last month, but they decided not to do anything. So we're going to wait and see what they do next month. My guess is they're going to cut. I would certainly hope that they cut, but part of the data that they're looking at revolves around this inflation data. So again, this morning, if they looked at that, they're not going to have any inflation worries, but we do have another big one tomorrow. And I believe both inflation reports will be out next month before the Fed meets. So they're going to still get another dose of inflation next month. But I think this is a big one. I think tomorrow is going to be a big one. Probably of everything that comes out this week, I do think tomorrow's CPI report is the biggest on the docket. If that number comes in at 0.0, I think we might see a big gap up in the market and all the selling, or the majority of the selling could be behind us. Not that we still couldn't go sideways for a while, but I believe if we can get a meaningful jump above the 20-day moving averages and hold it into the close, have a nice solid day, my bet would be that the August low and the 2024 low has already been set, or at least the most recent 2024 low has already been set at the beginning of August. That's a lot of ifs. We got to get through this period, but obviously the flip side, the inflation number comes in above expectations. Look out below. I could see a gap down similar to what we saw last Monday. So holding into this report tomorrow, I think, you just got to, if you're going to hold, pick your side and, maybe see if you can go out and find yourself a 4-leaf clover. Because I don't know which way it's going to go, but whichever way it goes, I think tomorrow's report could be pretty meaningful and pretty decisive. We'll see what happens. Now it'll probably come in right on expectation, open flat, but we'll see what happens. Moving on, S&P 500. So we've already talked about it, but here's that look on a bigger chart. You can see we're still well above, even the low that we had early August was well above the April low. My belief is on the S&P that if we do have a problem with maybe CPI tomorrow, or maybe it's retail sales on Thursday that comes in really slow or really low, I could see maybe a move back down to test this level, potentially go below it. I'm thinking the April low would hold on the S&P 500. I've talked about potentially seeing 4,800 to 5,000 if things were to roll over and things really got a lot worse short term. I could see that level. I'm not predicting that level. I'm just saying that would be my, if things do roll over and we get some more bad news, that would be the level I think prices could gravitate toward. If you followed me for years, I am not bearish. I'm cautious right now, this period. I need to see better action on the charts, but I am totally bullish long term. I am extremely bullish long term. Could that change? I think the only thing I think that would make that change is if we have another big surge in inflation. That I think the market wouldn't handle well. And I think you'd have to start thinking that it's going to be more, I don't know if it would be a secular bear, but it would probably be a pretty deep cyclical bear. But again, that would be worst case. And I'm not talking about just coming in at, plus 0.3, 0.3% tomorrow. I'm talking about really starting to ramp up over the next few months, seeing, 0.3, 0.4, maybe even a 0.6 or something. Those types of readings where we're getting the signs of a pretty good surge in inflation again. To me, that's the only thing that's going to take this market down. Otherwise, I think we go higher. Even a recession. I think a recession, we'd be weak for, maybe the next, maybe this quarter. But once the Fed started kicking in with interest rate cuts, I think the market would start to anticipate the strength ahead in 2025. And I don't think the market's going to go down that much after, say, September or early October. But that's looking out a little ways. And obviously, we've got a lot to try and get through between now and then. NASDAQ 100, I think this is a little worse looking chart than on the S&P, and it has underperformed on the way down, although it's trying to start to maybe show a little bit of leadership on the way back up. Still a lot of overhead resistance, though. I mean, this is not out of the woods by any means. And in fact, let's take a quick look and just see what everything is doing. I said we'd take a look at futures. We got about 8 minutes to go before the market opens. We got the diamonds up a little less than 0.2%. We've got the spider up 0.6%, QQQ up 1%, and the IWM up 0.8%, just a little over 206. So anyway, it looks like we're going to probably be up challenging or approaching some really key 20-day moving averages. We'll have to see if we get through. And then, of course, tomorrow is really the one that, we might be poised to just have a huge melt up tomorrow with a non-existent inflation number. Or again, like I said, if it comes in at 0.2, but especially if it were to somehow come in a little higher, I think that would spur another round of selling. IWM fallen. I mean, this was really a telltale sign to me of how disappointed Wall Street was. One second. To me, this was a telltale sign of how disappointed Wall Street was when the Fed elected not to raise and not even to, kind of ensure that we're going to have a cut in September. They just said it would be on the table, that they were going to continue to look at data. So, they started to get a little bit more dovish, but not really. They're still leaving their hawkish views open for the next meeting. And I think the market was looking for a lot more than that. One of the reasons was how the IWM traded and some of the other areas that would do extremely well with rates coming down, like the regional banks. This area just absolutely exploded on the June CPI report, that release of that report on July 11th. I mean, this was a massive move to the upside in the IWM. And over the course of about 2 weeks, the IWM outperformed the NASDAQ 100 by 18 percentage points. 18. Haven't seen that in a long time. I don't even remember when we've seen anything like that. Perhaps maybe back in 2021 when the small caps took off. But I doubt that there's been anything like this since 2021. So clearly, to me, the market saw that CPI report and said, the Fed's lowering. I mean, there's no doubt. Fed is lowering. And as a result, many of the smaller banks, regional banks, are in the IWM. That's a big part of the IWM, that along with biotechs. And had that big move to the upside. And then the announcement came out, the Fed announcement, where they didn't cut and they didn't guarantee or even, suggest that they would be cutting in September. They just said it'll be on the table. We're going to continue to watch data. From there, look at what happened to the IWM. Gave it all back, all of it. That big move up in July, going from 204 to 228. In 3 days, we were at 197. Now, you can come up with whatever narrative you want. I mean, I look at the charts and I try to figure out what the story is that the market's telling me. And to me, it was, hey, we're getting rate cuts. And then, nope, we're not getting rate cuts. Once again, another delay by the Fed. That's how I interpret this. So we'll see how we go from here and what happens if we get another nice, tame, dovish kind of CPI report. If we get that tomorrow, that I'm talking about it a lot today because I really think this is a big report coming up, because I think if it comes in really low again, I would not be surprised to see another similar move. I think the market's kind of played its hand. When the rates are going to come down, I think we have a pretty good idea of what's going up. So if you wanted to really take a shot in the dark and you think inflation is going to be low, I mean, I would think one of the areas that would really benefit a lot from that would be the IWM. But I think it also, again, if it goes the other way, who knows? Transports just keep trying and trying and trying, 16.2, 16.3 to the upside, and then they falter back. And another group that, looks really similar to what I just showed you on the IWM, it's the transports. Big move up, 5-day move up from 15,000 to 16.3. That's almost 10% move in the transports in 5 days. Why would that happen? Well, if you think rates are going to be cut and that's going to help the economy, transport's going to ship more goods. So that's why Wall Street was pouring into transportation stocks. But then we had the Fed meeting and right back down below where we were when we started. So again, I think it's pretty clear to me what was going on in the market. Not sure why I put this in here, but okay. Do want to just mention that if you are interested in joining us for tonight's Max Payne event, you can go to earningsbeats.com, start your no-cost trial right there. You can see a little bit about the report or the event tonight. You can register there. Also want to mention, if you just want to be a free Earnings Beats Digest member, this is our free community. We have tens of thousands of folks that have joined us. Why wouldn't they? It's free. Go down to this area where you can subscribe. Name and an email address is all it takes. And once you have hit that subscribe button, you'll start getting the newsletter, which comes out on Mondays and Wednesdays. We also have a lot of free events from time to time. Everybody in our community is always invited to those, whether they're free members or paying members. And then, again, we'll reach out many times when we have events. We'll reach out to our free community to join us for a 30-day trial to come to some of these events and experience what we teach, some of the things we talk about. I think, we've got a pretty good track record going back, since we've been doing this for years and years and years. I think our guidance has been second to none. And part of our guidance revolves around Max Payne, at least short-term guidance. So that's on the docket for tonight. Hopefully you'll be able to join us. As far as the chart of the day for today goes, I wanted to pull up SMCI. Now, SMCI has been under a lot of pressure to the downside. They just missed on earnings. They actually missed by a wide margin. Very big surprise. But this stock was built. I mean, it went up so high, it was expecting perfection. And instead, maybe Wall Street was getting word early on. I don't know. But prices were starting to fall. And then we came out with the earnings, which was not good. I think earnings came in like at 6.25. And they were looking for over $8. I mean, it was a big miss. And when you're talking about a big growth stock that's built, is valued on really good earnings, you don't want to miss. That's the whole thing with growth stocks in general. They don't have a book value that's anywhere near their valuation. So, if you're looking for, looking on their balance sheet to try and justify their stock price, you'll never be able to justify it. It's built on all their grandiose dreams in the future. And when those dreams start to fall apart, so too do their valuations. And so we're seeing it pretty clearly here. SMCI has dropped from 970 3 or 4 weeks ago to a low. We got down under 500. It was a 50% haircut in about 3 months, or excuse me, 3 weeks. And that, a lot of that is because of the shortfall in earnings. However, there is an options expiration week where all of a sudden a lot of folks have been playing puts on the stock. And now movement back to the upside for a couple of days could wipe out a lot of these in the money puts. So this is going to be an interesting stock. I'll talk about this one more later today. I'm going to go over to CBOE and calculate max pain on SMCI and then see where it comes in at. But my guess is this is a stock that could easily put on $100 between now and Friday, especially if we get decent news. If we get a good CPI report, actually, let's see what it's doing today. It was up 40 something yesterday, or 30, 32. Let's take a quick look and see where SMCI is. The market just opened. It's up another 21 today. So I'm not surprised because going into option expiration week, this is just a temporary. This doesn't mean it's ready to go back to 1,000. I'm just talking about for a couple of days, maybe we get a little bit more of a pop, and then reality will set back in. So, but we can talk about that. Last thing before we go is I just wanted to pull up this XLK S&P 500 relative chart, because you can see during the month of July when we took that big hit, technology absolutely was getting killed. We moved down to about a 3 month, almost a 3 month, or excuse me, not a 3 month. We were in August, so we could go all the way back probably to about October of last year. So we're talking about almost a year, maybe 10 months, a 10-month relative low on technology relative to the S&P 500. So it went from an all-time high in relative strength at the beginning of July, think back to that CPI report, and it's given back a ton of ton of that strength, that prior relative strength, and actually went down and took out the 2024 low, and now trading down close to about the October 2023 low. So this is a group that is bouncing right now. Could be options expiration. Maybe we'll get that big report from CPI. The CPI number tomorrow. Maybe that'll help spur this group back and where it strengthens and starts to lead again. If that doesn't happen, though, or if we come out with good news on the CPI and we can't get through key moving averages, we still got a lot of economic reports coming out later this week. It could be that we get decent, good inflation numbers and we start to see even additional weakness in the economy. And if that happens, that weakness in the economy is something that, at least short term could take us down. So it's just a crazy market out there right now. I still think it's a time to be very cautious. I mean, I know with hindsight, you can go back and you can see exactly how far we dropped, how far we've rallied. But when you're trading in the midst of it, you don't really know that's going to happen. We don't know how far this rally is going to go. Personally, for me, I've just been kind of sitting it out, maybe trying to take on a trade here or there kind of a thing. But I go into every close with 100% cash right now. I don't know where we're going to open next day. And so, again, what happens tomorrow with CPI, what happens Thursday with retail sales, I don't know. We'll all find out here over the next couple of days. Anyway, let's get a quick update on the overall market. Got the Dow up 0.5%, S&P up 0.8%, NASDAQ 1.2%. Small caps up about 3/5 or 0.6%. So everything's green. We got the VIX back down under 20. It's at 19. But remember, on the way up, when it goes through 20, I get nervous. On the way down, when it goes back below 17, I tend to get bullish. So we've gone back below 20, but we're not below 17. So we're kind of in that gray area again, where whatever happens. We could see the VIX at 28 tomorrow, or we could see it back down at 16, which would be really good for the market. But I'm going to wait and see where it goes before I put my money up. Anyhow, everybody have a great day. Oh, I do see Starbucks, by the way, having a great day today, up $15. I don't know what maybe they came out with, but that's a latte. Sorry, couldn't help throw that pun in there to end this show. Anyway, everybody have a great day. Happy trading.